Good morning. Happy Thursday.
Happy
Welcome to the show, Coffee Time with Marie Torossian, CPA. Good morning, Pedro.
Good morning, Marie. How you doing?
Very good, very good. Good morning to our viewers and our audience. For those of you who are returning to us, welcome back. We always love having you here. For those of you who are new, give us a thumbs up or a hands up in the chat so we know you are new and we welcome you with open arms. As always, I encourage you to subscribe, like, and share my channel and the episodes that you are looking at. We are going live every Thursday at 10 a.m. Eastern Time on LinkedIn, on Facebook, and YouTube. So, with that, I am your host, Marie Torossian, certified public accountant and a chartered global management accountant, an auditor, and a CFO. I use my proprietary and registered methodology, Valuation MT, to help business owners that reach their first million to 10x their business using my strategies. And as a Green Cardinal licensee, I also coach my clients in sales, marketing, and finance. I'm also an author of 2 books, The Complete Guide to Business Growth and Business Owner's Guide to Operational Accounting. And I'm going to put those links in the chat so you can get those books. Learn, implement, and grow. So I also want to bring up and remind everyone that I have quite a few webinars coming up next week and the week after, and you'll be able to get free access. These are free webinars. You can sign up to them. Please go to my new business website, www.theprofitlab.biz, and you'll be able to get signed up right there on the front page. Okay. With that, you know that I always have my weekly guest, my tax colleague, and my friend, Pedro. Welcome, Pedro.
Good morning, everybody. It's a good day. Pedro Gonzalez, your CPA, business and tax strategist, helping our clients with their, especially in today's environment, cash flow. Cash flow is lifeblood. I'm being extensively working with various clients on helping them with their cash flow and improving their flow, like the circulation, the blood circulation into their business.
I love that. That's what I say. We are doctors and surgeons of business, so I love that.
So we're there to help you. We're your physicians, your financial physicians. So we're helping our businesses in that area, tax planning. I know there's a lot of people out there looking for more stimulus, but I can guarantee you that we have a stimulus for you, and that is tax planning. It will provide you additional funding through some of the strategies that we develop to help our business clients generate additional stimulus for the business. And now, number 3, exit strategies. Like I said many times, we are all going to exit. It just depends on how we exit. So
absolutely,
with that, we're helping all our clients achieve their financial goals.
Absolutely. That is awesome. So before we go into today's subject, I just want to bring everybody, a quick summary of, episodes we've had in the past. We love, talking about self-employed individuals and, all the accounting tax strategies for them. We've specifically covered partnerships. We've covered financial analysis. We've covered how to trim down your costs. We've talked about using a car for your business. So these are just general ideas, like just some of the things we've talked about. In the past few weeks, we talked about IRS audits versus financial audits. And so please, if you're unsure, go back and check those as well. And then last week specifically, we had a special guest and Douglas Cowgill, and he's an immigration attorney that we work quite often with on the common clients that are investors coming to the U.S. from Canada and other places, and we provide the business plans if they so choose to work with us, of course. And so he explained so many different areas of how people and investors are coming to the U.S. And how us accountants and attorneys can work together on those. So today's conversation, Pedro, we've had, with our clients, there's some questions that come up all the time.
Correct.
So one of the questions that again it came up this week for me, and I'm sure it comes for you all the time, and it's when is the right timing to apply to be taxed as an S-Corp? And it could be, from, already a corporation, or it could be an LLC. So I'll just open up for you to kind of cover it first as my guest. So you take the first stab at it.
Yeah, no, it's a really good question, Marie, because you're gonna find, and I know I come across of this kind of situation where somebody either they incorporated themselves or has somebody else do the incorporation, but then when you ask them, in their mind is I'm an S-Corp, but they don't realize that an S-Corp is an election that you make. The incorporation by itself does not create an S-Corp. An S-Corp is a tax election. It's not a state. For purposes of legal, you're a corporation.
Right.
The only difference is that you go a step further and then you make an election with the IRS to be taxed as an S-Corp. Now, I'm not going to get into the differences of a C-Corp versus an S-Corp, but there is some difference, and there's a reason why we do it. Now, if you want to be timely, what we consider a timely election, is when you do it within the IRS. You gotta love it, but basically, let me tell you how they word it. Is it it has to
I'm
be
sure
made
they complicated
no
quite
later,
a lot.
no later than the 15th day of the third month.
Yes.
Of the tax year. Okay, so what the heck does that mean? So if you're in So in essence, for most small businesses, it's gonna mean March 15th. You know what I mean? Because typically we're gonna elect the calendar year. So why they don't say March 15th is because some other you could elect a different year end. So that's why they word it that way. But for most small businesses, it's gonna be March 15th.
Right. So so for example, if someone you created the business January 1st of 2022, so you should definitely file that form. I think 2553 is it? By March 15, which makes it that 15th day of the third month.
Exactly. So you take that scenario, you incorporate it. Let's say in the first. Let's take that scenario. You can incorporate it in the first 3 months of the year. I mean, let's say in the first 2 months. So you're there in January. You incorporate it, and now you have until March 15th to do that election. So then it's on time. So then the IRS will recognize you in that same year. You receive a letter, and then you're good. Now the other scenario that sometimes comes up: what if I incorporate, let's say June of 2022.
Right.
Let's say that you just incorporated just last week, June 15th. You know what I mean? So what do you do? Well, March 15th already passed.
Right.
So you gotta go into the 15th date or the 3 months after that day.
So you're gonna have to always calculate from the date you got incorporated.
Correct. Yeah, because you cannot do March 15th anymore. You know what I mean? So you have to go from the point that you incorporate, because you're going to have a short year.
Right.
For purposes of that initial year, you're going to have what we call a short tax year. So then your year, let's say, will start, assume June 16th through December 31st. So that will be how you will calculate. But you still need to do it within that time frame to do timely.
That's awesome.
What we encounter, and I'm sorry, go ahead.
Yeah, I was going to throw another curveball for it too.
Yeah, go ahead.
So what happens if someone incorporated, and of course I know the answer, but like if someone incorporated, say in 2021, they did not file their in 2021 within the time frame. Correct. And now they have 2022 and they haven't filed their taxes either, but they want it to be an S-Corp. Yeah. So what do they do?
Yeah, no, and that's another common scenario. The oops daisy, I forgot to do the 2553. You have not filed. So in that case, you still have time to do it, attach it to that first year return. That's still a simple solution to that situation. You know, like you said, let's say that individual that incorporated January, March 15th passed, forgot about it. Now comes the time to do the first year return for that corporation, the 2021 return. So now here we are now in June 2022. So, you know, you will attach it to the first year return. You know, you're attached at 2553 to the return.
To the return, yeah. So you're kind of doing it while you're filing the tax return.
You're making the election with the return.
Right. And I know in the rules on the IRS page, you know, they say something about when you're filing late, they have to give some kind of an explanation. So that's where they would be entering some kind of a reason why they're filing it late as well. So awesome. And then what are possible, I guess, situations that may occur, like once they have to, let's say they operated as an LLC, let's say for a whole year, and now they're going to file the tax return as an S-Corp with the election. What are some of the, you know, situations that may arise from a payroll or other perspective, if any?
From the payroll, none. I mean, you have your EIN. You know, there's not going to be an issue of payroll. What could cause it's going to be an issue of the flow of the taxable income from the corporation to the shareholder, or in this case, if it's an LLC, to the members, to the member or members of the LLC.
Right. So if they're taxed, so would they need to have paid, let's say, the owner manager some kind of a salary or something like that they need to have taken?
Okay. No, I see what you know. Yeah, payroll. Yeah, payroll in the sense.
Yes.
Yeah.
No, that sense. Yeah.
Yes. No, that's a good. I'm glad you clarified that. Yeah, because in the case of if it's a corporation, it would not be an issue because you would have paid yourself as, let's say, a salary. Okay,
right.
So assuming the corporation is just, again, it's a matter of are you an S or a C-Corp.
Right.
So you would have established your payroll and you would have paid yourself a salary as either shareholder or one of the shareholders of the corporation. Now, the issue is you're going to encounter more of a problem is when you're an LLC and you thought you were a corporation, you set up a payroll. And because technically as an LLC, that you as a member of the LLC, you don't pay yourself a salary. That's when you're going to encounter some potential hiccups. If the person, especially if you already passed and they already filed the first year under the, assuming that I'm a kind of an S-Corp, but that's where it could cause a hiccup. Is an LLC that thought that they made the election, but they haven't. Because now you got to wonder, what do I do with this, salaries that I paid?
Right.
Yep.
Absolutely. Awesome. So this was very good because this actually comes up quite often. So and it's so funny, it just happens. And I don't think we had covered this specifically in any of the prior episodes. So I'm glad we were covering it today.
The best advice, and I'm sorry that I
no, go ahead.
Yeah, but this is the reason why it's advisable, especially the first year, is to get good consultation, because the reason that this happens is that the lack of real understanding of what happens when you're establishing a corporation. You know what I mean? You're forming this business, and most of the time we're not very clear what type of entity am I operating under. Am I because each one you can see has a different consequence for taxation and also legal ramifications. I mean, so if you're an LLC, and we discussed this in one of the prior episodes, is that LLC is not by itself is not recognized by the IRS.
Correct.
I mean, it's not a tax entity. It's simply it's a legal entity, but you have to tell the IRS what to do with this. You're an LLC. they don't know what to do. So either if you're a one person LLC, they're going to say, well, you're a disregarded entity. If you are
Right.
two or more, they're going to assume a partnership.
Right. Right.
And that's as far as they're going to go. You're not going to make an assumption. So you have to tell the IRS that I'm a single member LLC that wants to be taxed as an S-Corp. I am a two-member LLC that wants to be taxed as a C-Corp or an S-Corp. You know, so you have to tell them what to do with this. So why, this is why it's so critical that you have at least that first year some good advice legally and from taxation. So you're very clear, what to do, what kind of forms need to be filed, what is the timely. It's better to do it timely. There's some limited solutions that can be done for late filing. So don't assume that I do qualify. There's some limited exceptions. So I advise that the sooner you discover the oopsie daisy, to quickly, you know what I mean. I know that I didn't file it. Let's act on it, so then I can still solve this problem on a timely manner.
Right. Right. No, that's great. I'm glad you covered that as well. Yeah, and we've had other clients where they had that situation as well, like, some mess up they had in the past where an LLC was filed as a C-Corp without an election, then it was an S-election. It's complete chaotic. And it's important to work with, knowledgeable CPAs that are helping you figure out how to set it up the right way the first time, instead of having to go back and fix and then deal with the IRS, audits, similar to what we covered, a few episodes ago. So, okay. So another question that usually comes up, and those are with some clients or prospects that we get, where they may have had a payment plan with the IRS, and they want to check their status or where they are at, or because suddenly they forgot to pay for a while, and I don't know. So, what should they do? Where do they go? How do they get that information?
Yeah, no, it's a very good question. Also, the IRS does have a link. I don't have it in front of me right now, but there is a link that individuals can go and check themselves the status of their the payment plan, and it's something that they ought to do. You know what I mean? Even if you're making your monthly payments, you ought to check it. You know what I mean? Because you want to make sure that they are posting those payments,
Right.
and that the payments are being posted properly. So I do, and our clients encourage. In some cases when we're handling the cases for our clients, we will monitor that to make sure that those payments are being made at the. So there's a link. You should go and check it.
Yeah,
the errors have been made, and that's why I encourage clients to check it. I do encourage the online payments whenever possible. I would encourage that to be the preferred option. Because especially in the last, I would say probably the last 3 or so years, especially during the pandemic, and they've been notorious for losing mail. But after the pandemic, it became a big issue, meaning that they were losing tax returns, even including tax payments. And unless you have a way to prove it, meaning that you have to have certified mail with a return receipt that they are acknowledging they received this correspondence, you basically are out of luck, because you have no way to prove it, even though you mailed the check. You have no way that they received it. You know what I mean? And so you might say, well, it has not been cashed, but I know that I sent it. So now it's up to them to. So the importance of that return receipt is that it will prove that I did, in essence, I gave you the check. Now it's your problem that you did not post it.
Mm-hmm. Right. So the burden of proof is always on the taxpayer.
Yeah, it is. And that's why, the importance of, one, to monitor your own account. It is your responsibility to monitor it, that if you do notice something out of order, that you do notify and contact the IRS immediately. We do this for our clients whenever they engage us to help them in those areas. And number 3, that if you're gonna make the payments, utilize a payment that will secure or eliminate, reduces the risk of late postings or that it gets lost.
Yeah, absolutely. So yeah, I went ahead and I put the link. It's going on there, guys, with the
Yeah.
banner across there.
Yeah.
It's irs.gov/payments/your-online-account. So, and I'm reading out loud because that's for our podcast. So
Yeah.
for our listeners, because they won't be able to see it. So I'm going to read it one more time. www.irs.gov/payments/your-online-account. So you can sign up there, and create your account if you've never had it. Create your account and be able to see where your status is, what is
Yeah.
owed, and then set up your payments as needed from there.
Correct.
So okay, so we have another question here. So this could be slightly, maybe we may have touched up a little bit on it, but not completely. So the other question usually comes up is if kind of someone started a business, let's say almost end of the year, let's say just for example's sake, let's say, December 1, 2021, they started a business, but really there was no activity, right? They just maybe opened the
Mhm.
business account, but that was it. They didn't really do anything.
Mhm.
Do they need to uh, file a tax return for their business? And the other side is that if, let's say, they had business for a while, and then now, the last year, 2021 was their last year, and they technically didn't do anything under that business, and they kind of they're like, oh, okay, I'm not going to do anything anymore. I didn't have any transactions. I don't really need to file.
Well, the short answer
What
to
should they do? What is the right thing to do?
the short answer is they need to file. The first year, even if it's zero, which is sometimes common, especially when you're started your operation at the very end of the year, it is not uncommon. That you're starting. You probably don't even have expenses, because the other thing that some people forget is the what do you call it? I'm escaping the word right now. The startup costs.
Right.
So
Right.
what happens is I started a business in, let's say, the last quarter. So you ask the question, have you been in operation? No. Which it might be true. It's not an operation in the sense I'm not generating revenue, just Marie. I just
Right. Right.
started in
Right.
October, and I have sold nothing. So their thinking is I have no taxable events.
Right.
However, they're forgetting is for that process, I incur some legal fees. I hire Marie to do a business plan. I hire Marie to do, I don't know, whatever. Okay, accounting. But I'm sorry, not accounting. Let's say there's some other consulting services for me to get started. But I have sold not one of my widgets yet.
Right. Right. Right.
So do I need to file? The answer, yes. Even though my P&L is going to be at this moment zero, everything is going to go into a startup cost at the
Right.
moment. And there's some deductibilities in there that we can do. So, but what happens is they forget that those are deductible. So you could, you're missing that. Now, assuming that a completely zero operation, like you said, December, I just did it at the end of the last month, probably the last couple of weeks of the year. So in
Right.
reality, there's nothing. All I did is I went Zumbase and did an incorporation, EIN, and that's it.
Right.
I will still file a zero return.
Okay.
You know.
Yeah. Just to start as a clear,
Yeah.
just a clean slate, hey, I just started, December 15 and no transactions whatsoever.
Right.
Zero. I'm claiming zero, but here it is. I'm
Yeah.
starting with fresh.
Yeah.
Got it.
Yeah. Because at the moment you register an EIN, the IRS has a record of you.
Right.
Yeah.
Yes.
So might as well just go ahead and file zero. Don't wait for the IRS to say, oops, what happened with your 2021 return?
Right.
Because now you're gonna go back. You have to now file potentially a late, late return and all of that kind of good stuff.
Right. Right. Absolutely. And then pretty much the same for even if it's the last year and you decide, hey, I'm just not going to do anything under this business anymore, or I got a new job. I'm not going to do anything here anymore. So you still have to do a final return.
Court
close
final
the
return.
doors.
Exactly. You file. If you notice on the top of the tax return, usually will say initial or final. You know what I mean? So you file. In essence, you're closing the business. And also, it gives you a basically you informing the IRS this is the end of this enterprise.
Right.
So then they cannot be sending you letters later that, because again, the IRS doesn't know. I mean, you have to, you're gonna start getting notices, and you would assume that the IRS, well, I haven't done anything. Well, you have to let them know. I mean, you filed a final, meaning this is it. Do not bother me anymore.
Right. Exactly. Because I mean, imagine someone had, let's say, I don't know, $20,000-$30,000 net,
Right.
they reported the year before, and then now this year they don't report, and the following year they don't report. Then the following year they don't report. And the IRS is probably gonna be like, someone's hiding something.
Yes, exactly.
This could be like a red flag.
Exactly. And they're gonna start getting these notices with penalties and interest in your, like, what happened here. But it's a good point that you bring up. The other area that I would also suggest, that accounts, tax account you gotta close is your sales tax account and your payroll. That's you have to notify the, with your 941s and so on, when you're gonna, basically, I'm not gonna have any more payroll. So, to notify them that, in essence, all of these are being closed. Sales tax the same way. If you have sales taxes, to file a final return so they know that,
Awesome. Yeah, that's good to know, and I'm sure our listeners and our audience are super appreciative of everything we covered today. Anything else that's on your mind that that just popped in?
Well,
we're talking.
Since we're in the topic of IRS and IRS notices and all that, something to be aware. IRS is starting to, the amount of correspondence now is increasing. The IRS, you're gonna probably see some more activity from the IRS inquiries, and so if clients and anybody in the audience or listeners are receiving notices, is to act on it. I mean, do not postpone it. Some of them are potentially very simple responses. Some of them might not be so pleasant, but not responding is not the solution. So if you're receiving IRS notices, to respond. Be aware of also, it happens every year, the scams. The IRS would not be calling you. Do not provide information over the phone to anybody calling you representing to be the IRS. I mean, you should have been notified first by correspondence. And if you're aware and you know that you're having tax issues, to hire somebody to represent you. Because again, there is a proper way on how to respond to the inquiries that can minimize unnecessary headaches for you.
Yeah, absolutely. And I think we covered this, and I'll remind everyone as well, a couple of weeks ago when we covered the IRS audits, is that whenever you get one of those letters, it's usually better to have someone third party, like a CPA, represent you instead of you dealing with it, because we know how to handle those type of conversations on your behalf. We might be able to resolve something a lot faster if you, compared to if you had to kind of deal with it and you don't know what they're really asking for. And then it's better to have that buffer between you and the IRS agent and have someone knowledgeable actually help you and guide you and resolve the matter on your behalf. So we definitely recommend you do that. So, okay, so this was a great conversation. I always like the Q&As when they kind of come in, and it's really fun because I feel like it's directly related to someone asking us questions.
Exactly.
If you guys have questions, please send it our way. You can send it to me directly, Marie at marietorossiancpa.com. You can submit it through my website as well. Just type in your information and say, hey, I have a question for you for your show, and then I'll take over and answer it here with Pedro on the following one. So it's almost time. So any other thoughts, Pedro, before we close out?
No, nothing else at this moment. Marie, thank you.
All right, awesome. So as always, I want to leave you guys with a quote from motivational speaker Jim Rohn. You are the average of the 5 people you spend the most time with. I hope that we are 2 of the 5 people you are spending your time with to learn and grow your business. So until the next episode, have a wonderful and a blessed day.
Awesome. Take care.
See you next week.